Welcome to another episode of Bitfinex Talks. I'm your host, Ricardo Martinez. Today, I'm joined by Gabor Gurbacs, who is an advisor at Tether and also at VanEck. And he's come to the show today to discuss the recent approvals of the Bitcoin ETFs, which I'm sure everyone is very well aware of. Gabor, how are you today?
Hey, Ricardo, good. Nice to be back. Excited to cover this topic. So Bitcoin ETF approvals, and hopefully we get to some stable coins and the world's next structures after ETFs. So let's do it.
Yeah, I definitely want to get your input on stablecoins as well, and maybe any synergies that you see between the two markets. My first question, I guess, is what kind of general overview can you provide for all the newly launched Bitcoin ETFs? I know that there was around 10 or maybe a dozen ETFs that were approved in the SEC's decision, which was publicized with much fanfare. Like, what do you see, I guess, in general for all these ETFs that just launched?
Yeah, so I think the first thing to start, this was 10 years in the works. So there's been a number of firms, including ours and myself, that worked on it for nearly a decade to get these ETFs approved. It was time to approve these ETFs, and I think it was past due in a way. So very excited that they came to market. The most important takeaway from it, that through the Bitcoin ETF, Bitcoin itself became, in a way, a legitimate asset, and it integrated into the US capital markets. This is a big step because it removes stigma. Bitcoin cannot be a scam if it's in an ETF. It's an implicit, while the chairman of the SEC wouldn't say it, but it fits into the capital market system. It's a blessing that it's as much of an asset as anything else that's listed in an ETF format. So it's a huge step. In my view, an ETF opens up Bitcoin's adoption vector 10 to 15 times from a market sizing perspective. There have been a lot of funds, institutions, sovereign wealth funds, money managers, pension funds who were unable to touch Bitcoin because it wasn't grabbed in a securities format. It's no longer the case. So this has been a huge step in the works for 10 years. Glad it has been approved. As you mentioned, 10 of them or so have been approved. Some of us are working, like myself, on that for nearly a decade, and some of the guys just filed a year ago, and they were also approved at the same time. I have some disagreements with that structure. I'm more of a merit-based guy, and I think sort of those who have been working on it and paved the path towards the ETF should have been approved earlier, or given some head start at the minimum. Yeah, very proud of it. Excited about how they're going to gather assets, how Bitcoin is going to fit into the portfolios. What these ETFs allow is basically the various sales departments of the VanEcks, the BlackRocks, the Fidelities of the world will now be able to talk about Bitcoin and how it fits into the portfolios. I think 7 or 8 years ago, I wrote a first FAQ type of document, but where I said that institutions should hold between 1% and 3% of Bitcoin in their portfolios. And I still hold that view that they should have at least that number. Maybe given the geopolitical turmoil, it's a higher number, I think 5 to 7. Maybe a little bit of gold if those who are more traditional. But now it's possible to hold, again, for those institutions, Bitcoin in a security format. So I'm excited about that. And I think personally, when people ask me the same questions from Bitcoin ETF approvals 8 years ago, I feel like the market has matured a little bit. So there's now a futures market. And the CME Group is the largest futures market provider in the US. So people call it a market of significant size. It trades real volume. And that made regulators comfortable. And that was one of the reasons why ETFs were approved. Other reason, of course, all the legal and court battles that were going on, but over time, the problems that have been solved to pave the way for ETFs is this regulated market of significant size concept, which has been achieved through a regulated futures market in the US. The question around pricing, how do you price an ETF and then track its net asset value? Those of us who trade on exchanges like Bitfinex, that there's a Bitfinex pricing, but there are also smaller and less liquid exchanges that have not that good pricing. So what I've worked on is actually indices that incorporate liquid large exchanges for Bitcoin globally and make that available for an ETF so that you have institutional grade pricing, so there's no manipulation or anything. So that's That's been one important win and the requirement. So far, like indices for pricing has been solved. The regulated market of significant size and surveillance on futures markets have been solved, and custody has been a big issue. So a lot of custodians who serve for Bitcoin ETF products have worked a lot on reporting on holdings and just trying to fit into the general accounting framework. So that's non-sexy work, but took like 3-4 years to get up to standards of exchange traded products. So those three main factors paved the way for approval, and I'm glad it's done.
A lot of people kind of expected the Bitcoin price to explode upon the approval, and that hasn't really panned out the way many people expected. I guess the approval's kind of been seen more as a sell the news type of event. Should ETF investors be concerned, or do the establishment of new markets like this typically take time?
I think just a very simple answer is people had bad expectations from the market. I think people don't understand how much money is usually flowing into the Bitcoin markets and Bitcoin ETFs, or ETFs in general, on a daily basis. ETFs actually shattered historical records on assets flowing into the funds just in the first trading week, so like 5 days of the market. We've seen 3 billion flowing into ETFs. This is excluding Grayscale, which has seen some outflows. That's huge. And actually, from a ranking perspective, 2 of the Bitcoin ETFs made into the top 10, basically ETFs daily flows, and that's crazy. That includes the S&P 500 trackers. This includes the total market indices. Some of them, which are, and funds that are tracking those, some of them are $400 or $500 billion size. Some others that's the S&P 500, and the Nasdaq 100 trackers are 280 billion, and some of the other large funds are also well over $100 billion. And Bitcoin making it into that category in week 1 is amazing. So the launches of these funds are just like, to give you context, is shattered records that I've seen on the ETF launch side, shattered records overall. And then if you also compare, for instance, some of the Bitcoin treasuries and how much ETFs have been purchasing, or how much these new funds, and again, when I talk about ETFs, I exclude Grayscale because it's an odd, funky scenario. We can talk about that a little bit later. But the new ETFs that have been launched, again, they're just amazing, have garnered assets. And if you compare treasuries from the crypto space, El Salvador, I think it's like, I tweeted this from the other day. El Salvador is basically 25 times the size of El Salvador's holdings in a single week. It's about Tether's Bitcoin treasuries hold on reserves, on the Tether reserves. It's about the same size. It's about 40% of MicroStrategy's total holding that was vacuumed up in a single week. And so that's a big deal. These ETFs are buying Bitcoin, and it actually shattered my short-term expectations. And so, yeah, I'll stop there, and I have a few more thoughts, but yeah.
Well, that's actually very inspiring. Thank you for providing that context. I know you mentioned that you worked on an ETF approval for almost a decade, or over a decade, with VanEck. Now you're still an advisor with VanEck, but they were among one of the ETF approvals. Can you shed any light on their particular ETF offering?
I can't talk to specific ETFs, and I don't want to talk about U.S. securities specifically. But generally, yes, I've overseen some of the approach of trying to get these ETFs approved, and I think VanEck was really the first ETF provider to file for a Bitcoin ETF. The Winklevoss guys, John and I was partnered with VanEck actually in the custody fund, were the first ones to ever file as a company, but the first ETF provider was VanEck, and the approach was just stay true to Bitcoin's principles. So the Bitcoins, we actually hold physical Bitcoin for the fund, give back to core developers. So VanEck has gives 5% of the profits back to core developers, which is, I think it's an amazing initiative, and companies should give back. Some companies start following, so that's great. So that the Bitcoin ecosystem is seeing some support. So that's sort of VanEck's approach, focusing on accessibility, secure custody and all the basics that you would expect from a fund. And in general, like the benefit of an ETF is that it has transparent holdings, transparent prices, liquidity tends to increase with authorized participants accessing global markets, and then the things that have changed is that there's no sustained premiums or discounts in these ETFs to the magnitude that we have seen with over-the-counter products. And basically with the ETF, you can see your Bitcoin holdings next to your other brokerage holdings like stocks, bonds, ETFs, and so on. And I think again, there's a lot more benefit that's coming with having been listed in a national exchange like the New York Stock Exchange, NASDAQ, and CBOE. Again, the lesson is basically Bitcoin has integrated itself into the capital market system, and it trades just like stocks and bonds with the same oversight, the same sort of like safety measures. And it's just a huge achievement. And across the various ETFs, there's some differences in disclosures, but mostly they're very similar. They're akin to the what the gold funds are, and it's called the 1933 Act. Gold fund GLD was the largest. It's roughly $100 billion fund right now holding physical gold. So that structure has been put in place for Bitcoin. And in fact, after gold and ETPs, Bitcoin is the second largest commodity held in US ETPs. That's amazing. So
yeah, it's incredible.
Yeah. So I think again, it's very similar funds. Managers are slightly different. What I would say about VanEck that's a little bit different from others is that the firm's history speaks for itself. So VanEck was the first company to launch a gold fund, mutual fund in the US to hold basically gold-oriented securities. The firm's founder and the current CEO's dad, John VanEck, he has worked with Ludwig von Mises directly. He was a student of Ludwig von Mises and one of the early students of Austrian economics. So that gave it's sort of like in the blood of the firm to focus on scarce assets, Austrian economics, going back to the roots of Ludwig von Mises. Like as happens, like literally the founder of the firm was a student of him. So and that reflects the firm's clientele knows the firm's expertise in scarce assets and commodities, and I'm grateful to have learned at the firm for a decade about commodities management and ETFs, and Bitcoin is a natural fit.
You mentioned that VanEck is going to be donating some of the proceeds to Bitcoin core development. I know they're not the only ETF that publicly stated that they would be making donations with a portion of the profits. Just doing some napkin math, like how much flow towards Bitcoin development with these funds donating a portion of their profits?
I think you can kind of do the math. The margins are small now because there's price competition in the space, but I think hundreds of thousands of dollars to millions of dollars can flow to developers. I think that's my expectations as this space grows. And I think not only just sharing these profits, I believe that corporates will sit closer to Bitcoin development and will find separate way to donate, and more corporates will donate. And I think that will have a 10 to 50 times more impact than even revenue shared on the ETF. So the other firm was Bitwise that after VanEck, they offered also a revenue share on the ETF. It's very interesting actually that how competitive the ETF market became. So most of the offerings are in the 20, 30 bit range, except the Grayscale offering, which is 150 basis points and 5 times more expensive than the average market. But I think basically prices have been literally decimated. So the market is 10x more efficient, and I think that's something, that type of efficiency is coming broadly to Bitcoin trading and so on. And Bitfinex has been strongly positioning itself for a longer time for cost-efficient trading. But some of the U.S. marketplaces like Coinbase, retail pricing is still very high, and I think that's what ETFs compete with. And so that's going to be, I think we'll see some price compression on particularly U.S. exchanges as a result of the U.S. spot Bitcoin ETF approvals.
before the ETFs were approved, it was kind of like an open secret that people were using MicroStrategy stock as kind of like a proxy ETF offering before there were ETFs. Do you expect MicroStrategy like demand for the stock to go down now that the ETFs are available?
Yeah, again, I can't comment specifically on stocks, but Michael I think has been a leader in adopting Bitcoin as a treasury asset, and they have significant Bitcoin holdings. I believe it's $8 billion, and yes, market participants have been trading it as a sort of like a proxy for Bitcoin. In fact, a leverage proxy for Bitcoin. If you look at it, how it's operating. So I think if people who are like that leverage approach will probably stick with it. Some might go directly to Bitcoin exposure and just hold Bitcoin in an ETF form. Whoever is already kind of on board with Bitcoin might want a more direct exposure and less business risk. However, again, I hope that some money actually stays with MicroStrategy, because the money that they're holding will be reinvested to help Bitcoin, and I like that approach. The other thing that I've been hearing, and this is just an odd technicality, is that MicroStrategy is a cash flow generating business, and due to some of the accounting standards that they elected to do, they show up as a cash flow generating business as opposed to Bitcoin. So, for instance, at Vanguard, MicroStrategy stock is available, but they wouldn't list Bitcoin ETFs, and so that's an interesting way around the old guard of asset allocators and fund houses who wouldn't let something like a commodity like Bitcoin or gold on their platform, and they would allow a cash generating business. And so I think that's going to give buy MicroStrategy a little bit more staying power. Again, I don't know what will eventually happen to the price or not, but I think the market, and I'm grateful for Michael Saylor as well for his leadership and starting to buy Bitcoin and then putting it on the treasury. A lot of other corporates are considering it, and actually with the FASB sort of changes on accounting, you can declare the fair value of your Bitcoin assets now if you use it as a treasury asset. So I think that's a big deal. And with Bitcoin ETFs, since it's a security, you don't even need to worry about it. So I think a lot of people might be able to think about Bitcoin more seriously as a treasury asset. Not necessarily, again, this is up for debate, but a lot of the serious allocators don't think about Bitcoin as a treasury asset. They think about treasury assets as short-term instruments, usually under 3 months duration, government paper that has a yield. However, Bitcoin may fit into portfolios in more of a commodity and inflation protection team. So that's the sleeve that people are considering Bitcoin into, and then maybe treasury asset later. So definitely keeping an eye on that, and the FASB rules specifically, and the ETF approval legally and from a tax perspective allows people to put Bitcoin in their treasury account if they decide to do so.
What predictions do you have for the ETFs in the next 12 to 24 months?
Yeah, I'm sort of I'm more a long-term guy. I think looking at the next decade ahead or the next generation ahead is what I sort of like to do. There are a few predictions for the next 12 to 24 months that I think are interesting. So Standard Chartered put out a piece that they expect $50 to $100 billion to flow into Bitcoin ETFs specifically. That's sort of along the lines of what is reasonable. Right now, the space is around $30 billion. And equitable or a similar type of ETF, GLD, which is a gold exposure vehicle, similar 33x structure, has around $100 billion assets. I don't think it's a crazy thing to expect $100 billion to be like flowing into Bitcoin ETPs. There are large names in the space outside of VanEck, much larger names like Fidelity and BlackRock. Those are behemoths. Fidelity has their own distribution network, and there are that's set on trying to win in the space. So I think that's going to be great for Bitcoin. I don't know what price prediction that comes with, but I think the flows are I'm on the convinced myself to be on the same page with Standard Chartered. I thought it would be a little bit slower on the get-go, but turns out there's a decent amount of flow. And then what I believe is important long-term is that now that Bitcoin has increasingly worked itself into the capital market system and it's a legitimate asset and ETFs are coming out, I think more allocators can systematically put somewhere between 0.5% to 5% of their allocation to Bitcoin. And so if you look at it, and there's basically about 500 trillion in assets globally. This is in financial assets as well as hard assets. So if people would put 0.5% of the global allocation bucket into Bitcoin, that would be $2.5 trillion of inflows. And I posted this chart from BCG, the Boston Consulting Group, about a study studying assets and distribution across various jurisdictions, North America, South America, Southeast Asia generally. And I think, anyways, I think that the $2.5 trillion number, 0.5% of global allocation, where it currently stands, is not unreasonable. Now, 10 years from now, this, the 500 trillion, fiat central banks are going to print money. And this whole $500 trillion asset bucket will probably be more. We're going to reach 1 quadrillion or maybe even 2 in 8 to 10 years. And so that means that a $2.5 trillion allocation to Bitcoin will probably even be a conservative estimate if this 0.5% materializes. So that's what I'm focusing on. And what this means, and particularly, I think allocators in Latin America and Mesoamerica plus Southeast Asia are actually considering Bitcoin seriously in their portfolios, not just Americans and the U.S. market, but I think the global access point is sort of like the more important adoption vector. And whether they get it directly from Bitfinex, whether they get it through ETFs or wrappers around the world, that's a different story. And more importantly, and this was one of your top traders on Bitfinex, John Brown, was pointing out on Twitter that against Bitcoin, basically there is Bitcoin can be used as a reserve asset or something that you can borrow against. And so do not underappreciate the power of just using collateral assets, because if something is securitized, you can borrow against, you can use it in financial transactions. I think that has the potential to basically, not immediately, but in a few years, literally triple the reach and size of the market. Because suddenly, again, you can borrow against your assets and use it in various transactions as a collateral. And so there's a bond market that's being built around Bitcoin. And companies are incentivized to hold their money in Bitcoin in that case because they can borrow against it. So I think that's huge. And that wasn't possible for, I would think, like 95% plus of the companies that are in the space right now. So that's an exciting development.
Bill Barnhart, the guy behind Abra, famously said that the collateralization of capital markets using Bitcoin was probably his most important use case. That always kind of stuck with me. I want to change the subject now from ETFs to stablecoins. You've joined Tether as an advisor, as we mentioned at the beginning of the show, within the last year or so. What's your outlook on stablecoins for 2024?
Yeah, I think one of the obvious things that are coming up is 100 billion Tether, and it's interesting because that was now 6 years ago. I believe it was 6 years ago. No, maybe 6.5. When I predicted Tether was under 100 million, and I told a number of portfolio managers of my Bitcoin Breakfast series to keep an eye on Tether because this $100 million thing has the potential to become 100 billion, and that's just amazing to me that that's coming up for Tether, becoming $100 billion asset. So I'm excited about that. I think we're going to see more adoptions from the merchant side for USDT specifically. A lot of countries who struggle with inflation and still transact in fiat currency terms want railways that are reliable, and most of the world prefers Tether. So just standard merchant adoption, businesses will use more USDT as probably boring, but that's one of the most important adoption vectors. And then one of the products that came out as XAUT, that's a gold-linked Tether token where the gold is held in Switzerland. So this is the first time where you can use a liquid token to pay for anything in gold terms. So I think we're going to see some XAUT adoption in just the merchant channel. I also believe that some of the central banks and nation states will consider some more basically XAUT on their balance sheet as a way to access gold outside of their jurisdiction, which is very important for in countries where central bank reserves might not be safe and people might prefer to hold their money in a jurisdiction other than like in Switzerland, which is a historically neutral jurisdiction. And some of the gold, sort of like bigger gold reserves in the world are held in basically London or Shanghai. And, you know, the East doesn't trust the West doesn't trust the East. And so so traders and allocators usually, increasingly central banks are looking for neutral jurisdiction. So just adoption on that front is something that I look forward to. And what has been becoming more and more clear to me is Tether is, you know, thought about for now as sort of like a payments company that provide alternatives to banking or payments companies that's reliable, easy, and accessible in emerging markets. I think the future of Tether is replacing more of the capital markets structures in emerging markets, and the capital market structure includes, you know, capital raises, includes loans, includes full service portfolios, and if you think about it, this is just a crazy stat. So the US has about 4% of the world's population. It has about 20-some% of the world's GDP, and more than 40% of its capital markets. So I believe that the US capital market hegemony is going to be challenged because countries are increasingly recognizing that they need their own sort of like payments infrastructure, exchange infrastructure, full service capital markets infrastructure. And of all companies that I look at in the space, and that's what I'm betting on, Tether is best positioned to win there because it has been historically reliable and a trustworthy company, and it has the tools that banks do not have to compete in emerging markets, and nor do banks care in competing in emerging markets. And so that's something that I very much look forward to see how Tether is solving those problems and in emerging markets. And then looks like there's a blog that just came out yesterday on the Tether website. It has some information about ways in which nation states, institutions, and larger corporates can use Tether for various things like just to future-proof their economies, lower transaction fees. So that's all happening, and yeah. So again, I'm looking forward to that. Stablecoins, like just as I'm thinking about ETFs and stablecoins as we transition this discussion. When I joined VanEck a decade ago, about 80-90% of my conversations with clients, this is the largest banks and allocators, were basically about no, we don't touch ETFs. So literally 10 years ago, people didn't want to buy ETFs. There are asset managers today that do not buy still ETFs, and there's a stigma around it. I'm not kidding. And this is a large part of the world. And so ETFs are basically around for 20 years meaningfully, and they went from $0 to $9 trillion market capitalization by just simply transitioning and providing a more transparent, faster, better, cheaper infrastructure than mutual funds. Mutual funds beat hedge funds back in the day and became a multi-trillion-dollar industry. Hedge funds beat direct stock and bond investing. So I believe that the next structure after ETFs is going to be stablecoins. You can call it stablecoins, you can call it deposit tokens, you can call them a new type of financialized asset. But Tether has actually created the roadmap for what I call the post-ETF world. And it is in the race to start gathering those trillions of dollars of assets into this new structure. And this new structure, as you know, Ricardo, better than I do, you go to Bitfinex, you can trade 24/7. You can take on and off your money within seconds to minutes, depending on what you do, of course. You can access liquidity, you can borrow against your assets. So that's coming to the financial system. It's upgrading the financial system in a practical way. And, again, I think stablecoin penetration is just a small fraction of a percent now, and that's going to increase significantly. And it's going to replace traditional brokerage, banking, and capital market systems in emerging markets. So that's what I'm most excited about for Tether.
One of the most incredible things about Tether to me was last year I traveled all around Latin America when Bitfinex launched Bitfinex P2P, and I was in places where there was dire economic situations such as Venezuela and Argentina. And just to see on the ground the amount of people that were using Tether as like a flight to safety from the devaluation that was occurring with their national currencies was absolutely incredible. So like when you say that banks don't care about being competitive in these emerging markets, I see like a huge like empty space that Tether is actively like kind of fulfilling that role that these banks don't want to touch. I expect that to continue. When you say that Tether is going to become like a new like asset class for these new capital markets, how do you see that working exactly?
Very simply, I try to bring this up a lot to people. It will be similar to the mobile phones versus landline phone situation. For instance, only about 3 to 4% of Africa had a landline phone, and it was heavily concentrated in urban areas. So telecommunication services, or at least in the phone side, has never really picked up. Suddenly, mobile phones have been introduced, and Africa is now 80 to 83% connected. And this is what's going to happen with Tether as well. People simply adopt a simpler payment system. Tether will also likely offer services that banks would potentially offer, or brokerages, maybe through partnerships with Bitfinex, maybe through traditional banks. But that will spring into life and will have a mobile-like trajectory. And suddenly, people will not go to their banks to invest. Suddenly, people will not go to their banks to borrow. Suddenly, they will not go to their banks to pay, but go into a mix of companies like Tether and Bitfinex to provide those services. So in a way, that adoption curve has started. I think it's just going to get more systematized and more institutionalized and easier for customers to access those services. And just after the Bitcoin ETF approvals and sort of like a seal of approval broadly, I believe so these services will be better appreciated by people. So I think, again, it's going to be a mobile type of moment for financial services in emerging markets, particularly, as you said, Ricardo, based on your travels in South America. And I'd add Southeast Asia is a very similar type of environment. And Africa is about to have literally, again, a mobile moment just for financial services. So I'm definitely watching that closely. And I think I expect exponential growth for this.
Gabor, I've kept you a little bit longer than the half hour we agreed to. Are there any final thoughts that you want to leave the audience with?
Yeah, thanks for bearing with me on my cough, one. But the final thought is, again, really excited to see, after a decade of work, for Bitcoin to be accepted into the financial system. I always work with a lot of stigma around Bitcoin, and as you know, like, Bitcoiners is also kind of handled differently in the financial system. So that being demolished, that stigma is very important. I'm very proud of it, to be one of the leaders to do that. So we taught one and largely around the ETF. And two is, I just wanted to say, do not underestimate the next wave of innovation replacing the existing financial system. I think the next BlackRocks and Vanguards and PayPals and Visas are really in the works, and that exponential sort of like hockey stick growth is just coming. And some of the best thing about this is those people who are in harm's way from devaluation, from censorship and government oppression, they've been early to adopt this technology. So for the next 2 decades, I'm watching basically those people to actually get some value from it and live better lives. And again, to me, I think Tether specifically is a way to help the global middle class to rise. So the American model of the middle class as getting globalized, and a lot of wealth is being passed down. How it's allocated, it's actually right now around $70 trillion. And how it's allocated is going to be interesting, and it's going to reshape emerging markets, in my opinion. So I'm excited to be part of that, and thank you guys, everything that you do on the Bitfinex side.
Well, thank you very much for that insight, and thanks for the kind words. Do you want to give your Twitter or any other social media links so people can follow you?
Yeah, I'm at Gabor Gurbacs, so Gabor Gurbacs, just one word. On Twitter, if you just type my name, you'll probably find me. There's a lot of fake profiles, so just be careful. Thank you.
Well, thank you so much for coming on the show. I appreciate it. I know it probably wasn't easy with your cough, but I appreciate you coming on the show. Thanks.
Thank you, Ricardo.